This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Welcome back to Breaking Banks Europe. My name is Matteo Rizzi. I'm the executive producer of the show. This is show number 189. It's a new series that we're introducing. We call it Disruption Stories. I'm here with Jannick Malling, co-founder of Public.com. Jannick, welcome to Breaking Banks Europe.
Hey, Matteo. Thanks. Good to be here.
So Jannick is usually based in New York. He's now in Copenhagen. So we have a little axe in the same time zone from Switzerland to Denmark. Jannick, a little bit of background about yourself. That I didn't have time to read your full bio. I'm guessing Public.com is not your first sort of adventure, at least. So tell us more about you.
Yeah, absolutely. No, it's not. I'm originally from Copenhagen, now live in New York, co-CEO and co-founder of Public. Like you said, I actually have been in and around the investing space for nearly 20 years, despite only being in my mid-30s, which I guess is kind of interesting. But yeah, I started my career at Saxo Bank, who the European listeners might remember. Who was one of the early original sort of online trading pioneers back a couple of decades ago, and built another company, was part of building another couple of companies after that out of London, after the '08 crash, more in and around interbank liquidity between small and medium-sized financial institutions.
I understand all this just because I worked at Swift. Otherwise, it would be completely Arabic. But a few years at Swift helped me understand what you're saying. But yeah, I got it. I got you.
Exactly. So was part of building that company, a couple of companies in London for a few years, and then since sort of 2018, I went to stateside and started laying the sort of bricks for now, what's now Public. And Public.com is an investing app where you can invest in multiple asset classes, all from one portfolio. So that means you can buy stocks, ETFs, you can buy treasuries, T-bills, you can buy crypto, you can even buy things like fractional art and collectibles, and soon a bunch of other kind of asset classes that we're adding to the app, all from kind of one seamless experience right on your phone.
In which sense, Jannick, Public.com is a kind of the next generation sort of investing platform? Because keep in mind that with probably not the same success, but I've been close to investing platforms since Boursorama. When Boursorama started, I was in Paris back then. But I also have good friends, founders of the Nutmeg and the Money Farm But when I briefly look at Public.com, it seems like there was a sort of an advance, in having a one-stop shop for every possible type of assets. Can you explain us a little bit how this platform evolved, over the past 20 years?
Yeah, absolutely. So I think you had a whole movement start when trading went online. Like I said, Saxo Bank was one of the European players, but like Schwab, E-Trade, those kind of names come to mind in the US. And that brought the cost to trade down. And that was mainly on the desktop PC. It was even before Apple's kind of dominance, where everybody had a MacBook, right? It was back in you installed the exe file, if you remember those days. And then I think as mobile became a much bigger platform than the PC platform, you saw the rise of more mobile first investing apps, and with that, commissions kind of went to zero because you could suddenly scale out a business across many customers without needing a lot of employees necessarily, and branch offices and all that kind of stuff. And then I think what I call a little bit the final frontier in that gradual democratization of an asset class was this concept of fractional investing, which public was sort of that was our early claims to fame, and what we were sort of one of the original emitters of, which is this idea that you can buy a part of a stock. And so we live in a world where a lot of stocks have a pretty high price per share. When we launched this back in 2018, 19, Amazon was like $2,000 for one share, Google 2,000 or 3,000 as well. So as you can imagine, the median average savings account in the US for a millennial at that point was $2,500. So in other words, the median average millennial couldn't actually afford to buy a share of Google, but they obviously all know Google and use it because it also owns YouTube. And so the irony was quite there, right? Like YouTube especially is a platform that thrives on the whole millennial generation, and they couldn't even afford to buy one share to take part of that upside on a median average kind of basis. And so we built this fractional concept where you can invest down to $1, $5, $10 of any company, which completely transformed, I think, the way that people can invest, because it went from being something where you thought, oh, I need to save up all this money in order to start. And so there's a high buy-in for me. And when there's a high buy-in, it also means that the barrier that you need to meet in terms of how educated you feel you need to be is quite high. And then you're stuck in this like little bit loop of like, I need to educate myself a lot in order to risk all this capital because I've got one shot, right? And then people procrastinate. It takes time. And then they just end up starting their investing journey way later than they otherwise would have. And if there's one thing that history and the stock market have taught us, is start as early as you can, right? I think even Warren Buffett says, I have two pieces of advice for everybody. Start as early as you can and optimize your taxes or something like that. There's a quote like that out there. But the truth is, if you start when you're on average 35, but you could have opened a brokerage account when you're 18, that's 20 years of missed compound investing opportunity cost that you can never get back, right? And that's why it's so important to start early. I think recently Brad Gerstner from Altimeter is talking a lot about this with some initiatives that he's doing, trying to get even children kind of invested in the markets, etc. And so fractional was a huge unlock for all that. People can start with $10. They can add another $50, $100, $500, $1,000 every day, every week, every month, depending on where they are on the income spectrum, which really like takes the edge off, right? It allows people to ease into it at their own pace, but at least they get started. And then what we've seen is over time, they build quickly pretty good, great, well-diversified portfolios. And in tandem with that, their financial literacy exponentially increases as well.
We will talk more about financial literacy, and it's curious how banks or traditional banks, they all sort of and they still do run after what they call the mass affluence, right? But this sort of limit of the asset under management for the mass affluence was more in a region of I don't want to say $100,000. This is like the sacred grail, for banks, but certainly not the couple of thousands, right? Yep. And it is almost like right now, and I have two teenagers, so it's and my son is 18 and he's asking now, exactly, how should I start? Because of course, he has great exposure to good and bad influences, right? Crypto is largely also bad influence, and I want you to talk about this risk about the wrong literacy, that you can see today, especially on social media. We'll touch on it, but because it sounds like having a portfolio of a couple of $100. Even if you're like a super successful, it does take a long time before making anything significant. But maybe what people don't think about is that as soon as like they start working, for example, if they have a portfolio that they already used and they are used to the mindset, the right mindset, that's the name of the game, right? I mean,
Totally.
I'm thinking about this right now. So is that so?
Yeah, 100%. I mean, I think I'll say a couple of things. Number one is I think you're totally right about the banks and the larger players having this like $100,000. I think it's even higher, to be honest with you, right? They're sort of like going for the person in their economic prime. It's also, I think, largely male audiences with most of them, right? And so it's a little bit more old fashioned that way. I think one flaw in that thinking is, it's a point in time sort of estimation, right? And so what I mean by that is when somebody turns 18 and they open an account on public, they put in a couple $100. We don't treat them any differently than somebody that puts in a few $100,000 necessarily, because that person who just turned 18 might in 5-10 years have the $100,000 in their bank account, right? And that's exactly what this like fractional model enables. It's like I often equate it to, if the only way that you could learn meditation was to actually travel to Nepal or Tibet and like undergo a year-long course with a bunch of monks, very few people would do it. But a lot of people have learned to just do it for 10 minutes every day using a series of apps. And the same is true for financial literacy, right? If you have to undergo a whole education in order to learn it, that's just a high barrier that a lot of people can't commit to. But a lot of folks can commit to just spending 10 minutes every day. And that's our sweet spot with public, right? Like we actually we don't allow day trading. We're not really in like the day trading space. These are more people that are building their portfolios over time. And so from an engagement perspective, we found that that's also a little bit the sweet spot. Like if people can spend 10 minutes every day reading the news, we have like a built-in community around the app too. So you can see how other people that also own the stock are reacting to news that come out. That's hugely educational for people and really helps them get a diverse set of kind of viewpoints around all the events happening in and around the markets. That's the key. And I think if you can then action that also a little bit at a time, there's this thing called dollar cost averaging, where you basically just build up a position over time in a company. Then it really matters over time, right? And so you might start with a few $100, but slowly but surely, next year that becomes a few thousand. The year after it's 5. The year after that it's 10. And compound investing, like they said, really is the eighth wonder of the world. And that's an old sort of adage, an old truth that we're big time kind of playing into. And so we're trying to be a little bit more also longer term, I guess, in our thinking and not focus too much on any point in time situation for any prospective customer.
And by the way, you are a global company, right? So besides being fully regulated, I mean, whomever invests in any part of the world where they can, they are covered, right? Or what's the coverage today?
We started in the US in all states. And this summer, we expanded to the UK. So we're not quite global yet, unfortunately. But, the UK launch that we announced a couple of months back, I think we announced that we were going global into international markets actually in the earlier this year. And then we just went live in the UK a couple of months back, which is really exciting. Obviously,
so the next step, I suppose, is the European, because I was really about to go to my son, who is like 5 minutes from me, and say, hey, open an account on public.com, but he's a French resident, so I suppose that is going to be the next step, right?
Got it. Yeah, I mean, we can't talk too publicly about it, ironically, given the name, because we are in a highly regulated space, but we are quite excited about the prospects of the European market. I mean, I'm Danish, my co-founder and co-CEO is German, so we also just know those markets quite well. It's almost ironic that we started in the US, but the US is a little bit the Champions League of the stock market, I call it, right? It is where the biggest companies go to IPO, even some of the Danish ones, Unity, the gaming platforms, and there's like all the biggest tech successes in Denmark that I know have ended up IPOing in the US. And so it is far and away the best stock market. And I also think personally, the S&P 500 is one of the greatest asset classes of all time, not financial advice, but quite honestly, you'd be hard pressed to find an index that can compound like that has compounded over the last 20, 30 years, other places in the world. So.
Okay, so I will not ask you to like uncover yourself, at least publicly, and tell. Okay, so but then what is the name? I need to tell my son right now. I'll just ask him to like wait a little bit, and in the meantime to get
How old is
smarter
he?
about investing a
How
little
old
bit.
is your son?
He's just turned 19.
Oh, 19. Okay, wow. Yeah,
Yeah,
that I was
that's
hoping
okay.
you were going to say 16, 17 because then I still had
No,
a
no, no.
great
He can
joke.
even better. My daughter can wait a little bit more. It's fine.
Okay,
It's fine.
all right. Sure.
No, and I want to start like uncovering a little bit one of the topics that we sort of build this particular show about, which is the AI theme. Okay,
Yeah.
and and I wanted to start by saying that. There are billions of dollars of investments into AI applied to all sort of themes and verticals. Clearly, I mean, the smart data applied to investment is not new. Okay, but it is true that this democratization of AI must have and will have a significant influence, right, in the business. And why don't you like give us like the sort of the landscape to start with, and
Yep.
starting from generic to specific, and then what's your own view about it?
Yeah, absolutely. I mean, let's pick up on the sort of timeline that we talked about before, which is going from the PC and online trading to mobile, zero commission, and then fractional. You might look at that and say, okay, then you've gone from a place where it cost, I think when Schwab initially launched, it was like $75 for a trade, and they were considered a low cost provider back then for $75 per trade, believe it or not.
Ironically.
Right now you're at zero. You can do it from your phone. It's super easy, and you can even fractional invest and all that good stuff. But what happens after that? What are the other levers of democratization in that world? And I think you sort of move a little bit from the pure investing to sort of the insights, the research around the content around investing, because that's something that can certainly become a lot easier, a lot more digestible, and you can create a whole new experience around. And so from our point of view, we started, like I said, this like social community with the thesis that the best way to learn something in life, this is true for everything, not just investing, I think, is engage in discussion, debate, and converse with other people around it. Because the human brain works in a way where when you try to ask a question about something, or even actually sometimes when you try to explain something to someone, you end up understanding it better yourself, right? It's like a forcing function. And obviously, that's what we found with that model is it's quite a profound kind of way to learn. What we saw with the whole AI movement is, and the flaw in that thesis, if there was one, was really just like people should not just be conversing with each other; they can also converse with an AI now, right? And that's like the big kind of unlock, because anyone that's partaken in a forum of any kind know that like you ask a question and then you kind of wait around for the response for like a day, 2 days. You need to check it, etc. Right? With AI, it's just instantaneous. And so when you think about how a conversation evolves, back and forth 20, 40, 60, 80 times on a traditional kind of social forum, that can take a month, that can take longer. With an AI, it can all happen in a few minutes. That's I think one of the elements that's so powerful about it, because I think where you arrive is, and you kind of mentioned this yourself, Matteo, is like AI in the world of investing is not new. Right? Hedge funds, institutional investors, they've been using AI models for decades to inform, even sometimes fully automate. My old company was quite huge in algorithmic trading 10 years ago, which is we built a platform for that and worked with all these third-party developers to build all this algorithmic trading. And I kind of saw firsthand. I think you called it a little bit more machine learning back then, and you sort of had the stepping stones of like big data to machine learning to AI, now to generative AI, and then maybe at some point more generalized kind of AI. And I think, but that's been like the stepping stone journey. And the interesting thing is many sectors, if we step back from investing for a second, they took a long time to get to the machine learning part because they didn't have the big data part, because all the data was like hard to get. what's incredible about the stock market is all public companies, they need to put their data out, right? And so even today, where other sectors with AI are struggling, like where's the license to the input that go into the model and the answers, right? You might have heard about all this with like Reddit and Quora and Yelp and all this stuff. In the public markets, it's all public information. So no particular party owns it. A company has to put it out if they're publicly traded. The SEC mandates it, then it's free for everybody to consume. And that's why I think the world of finance has always been a quick adapter of AI, because the big data piece has been kind of largely solved a lot sooner than it might have been in healthcare, but the data is not, it's much more private, obviously, right? And other sectors like that.
So why generative? What is it?
So when I think of generative, it's sort of a branch of AI that using these large language models, it is able to, well, let's take the traditional AI that might be able to compute at a really quick rate and kind of learn sort of from itself in the past. And a lot of it, by the way, is very numbers driven, which is different from these large language models that are more on language than numbers. That's one very important distinction to kind of keep in mind. So I guess what we conventionally called AI like a few years back was really more being able to crunch a lot of numbers really quickly and kind of get to an answer, right? I think with the generative piece added to it, it's the ability to produce novel content that mimics sort of human creativity and the human kind of thought process behind it. And so when you apply that to the world of investing, it means that you can ask a chatbot, hey, how many iPhones did Apple sell last year? And that's a faster way of finding that answer than going on Google. But that was actually more the traditional one. What's really cool about the generative piece is that you can ask it a little bit more high level stuff. You can start conversing with it around, hey, how many do you think that they'll be sold next year? Relative, what are other risk factors that you see that could potentially weigh into whether they'll sell more or fewer or whatever? And so you really start to be able to use it much more like an intelligent research assistant, which is what we call kind of our thing. Like that's how we think about it when we've designed it to, like a research assistant. Like any hedge fund managers have a bunch of research associates that can do all this kind of work.
Yeah.
They have their little bullpen kind of army. And, if we can give that kind of a power to the retail investor in the form of an AI, then coming back full circle, I think that's the fourth and true final frontier of democratizing access to the stock market, not just to the ability to buy and sell and trade and invest, but also in the ability to level the playing field from a analysis and sort of information and insight perspective.
So how difficult is for the basic investor to ask the right questions, to an AI chatbot? Because you could think that indeed the barrier to entry, went much lower because everyone can access to these tools. But then I suppose it's also true that the way you ask the questions changes dramatically, the efficiency in which the information is being given back, right? So what is going to make the questions smarter? So how does financial literacy, the whole concept of financial literacy changes?
Yep. I mean, you're 100% right. So I think we got, sort of lucky, and we were very fortunate that we had two, I guess, head start advantages in this whole AI movement. One was we've been operating a social network with millions of members that's been conversing in and around the markets for years. So as you can imagine, we have a lot of people on how people ask questions and what tone of voice they use and how they generally talk to each other. And the truth is, when you are in a social forum or even on text message, you don't talk like you and I talk right now, right? There's abbreviations, there's fat fingering on the phone, there's all kinds of stuff, right? Like texting language is its own language in a way, right? It's sort of a derivative of English maybe, but it's different in some or in some pretty important ways. So that's the one thing. And then the second thing is, which goes maybe more into this point of like hallucinations that you might have heard about. So for the listeners out there, hallucinations is when these AI models get it wrong and they basically end up coming up with a totally incomplete kind of or like incorrect answer. And that's something that we were fortunate to be able to, we haven't eliminated it by all means, it's still early, but we're doing pretty good as far as reducing that, because 2 years ago, we acquired a company that actually took all these public filings and turned them into structured data. So in that public filings, it's a lot of text, it's transcripts of earnings calls, it's all this stuff. And so we already had all that data kind of structured, which allowed us to just feed that in a structured way to the AI model, which mitigates the error kind of rate from it, because it can much more directly, easily, faster too, by the way, just like pinpoint those exact numbers. And those are generally numbers that traditional AI models couldn't really get. So we had these two very distinct kind of advantages that allows us to sort of work around those issues. But otherwise, you're right, those would be the two main barriers, in like having users ask the right questions and then having the AI hallucinate as little as possible.
How does I want to say the risk profiles, or the risk attitude, of each user changes in this concept, right? Because the KYC, the risk profile, the MiFID, the European MiFID, forces you to profile your users and sort of attach to them a risk level that allow you to propose this or this sort of suites, of investment. How this changes? Will AI also help to profile, the users as well? Because potentially it could be dangerous as well.
So we similarly, by the way, obviously in the US have to capture all the KYC, your clients, or like, why are you investing? What's your time horizon? All this kind of stuff. That's I guess that's kind of a third thing, to be honest with you, that we have a little bit as an advantage, because we have so much data around our users, right? So we also kind of can use that to personalize the experience and like put people on the right path. And I think one thing that we've said from the beginning is, if you created an AI, I sometimes get this question like, well, AI just like run all our finances, and if we're all using the same AI to invest, then there's no alpha actually left in the stock market, and we're all going to be buying the same stuff. Like, how's that going to work out? Because then it's like one big collective hive mind doing the trading, and like that doesn't really work, obviously. But my answer is always like, I don't think that's where we're headed, and I don't see why you would, because if you do that, you get a little bit closer to the future where you're not empowering people, you're just letting them be lazy and being totally kind of hands off. And so they actually build much less financial literacy, right? And I think that's so one principle that we've had for this internally at Public has been like, we want to put you in the driver's seat, the customer, not the other way around. But we want to use this AI as a research assistant to empower you as much as possible. And the way that executes is like, if you have to go and read an annual report of a company, say you want to try and invest in a company, right? And you're like, I'll do some research, right? So read the annual report. Another Warren Buffett quote, by the way, he said like, hey, I'm all for people investing in individual companies. They should just read the annual report before they invest in a company. That's the least they could do. But here's the thing. If you're a parent, you got a couple of kids, you got a day job, like that's a long time, right? So that was big. Now you can do that in a few minutes, right? Then you can, every time the earnings call comes out, minutes later, it summarizes the whole earnings call for you, gives you just the pieces that you need to know. And so, you start to see how this is something that can really like by anywhere between, 100 and 1,000x give you time back without sacrificing the quality of your decision making. In anything, the quality of decision making goes up dramatically because you consume so much more content than you otherwise would have. You do the research, not just on every other trade, but actually now on every single trade, because you can, because it doesn't take you days and days and days. doesn't even take you hours. You can actually get very far having a conversation with an AI bot in just, 10, 15 minutes. And that's the part about it that is just quite phenomenal and really, I think, can help level the playing field and like I said, get retail investors out of this label that they've sometimes had of like being the uninformed kind of investors, because suddenly now they have all this information available in an easy, digestible format at their fingertips.
Last question, and I dare to say maybe it's not a question that you have been asked a lot. Let's see if I'm right. So there is one continent in the world that is by far the youngest. Average age 19. Where the challenge of fractional investment even goes to a further level, right? Because we are talking about Africa. Of course, we're talking about people who make on average between $100 and $300 a day, and services like insurance or investments, are a challenge because, of course, when your first worry is to put food on the table. You're less worried to die or what happens if you cannot go to work. And certainly you're saying yourself, why should I save even if it is like 15 cents or 20 cents a day, right? But do you guys think of this completely new market, in terms of, size, configuration, potential, population target, what's your approach to emerging markets?
So,
more than your approach is what do you think about it? Because you guys cannot eat the world.
I was just about to say I'll give an unselfish answer, which the truth is I've invested in a dozen companies that also offer like public for this and that and the other market, and Indonesia and a couple in some other emerging markets. And the truth is, I definitely think that customers deserve to be able to put their money in the equities markets wherever they live. And I actually think, especially like the US equities market too, like that's the incredible part, that you can even offer global kind of access wherever folks are, as long as they have a smartphone. And so I think that's hugely needed. I do also believe that's where we're headed, by the way. Like there are a lot of these companies now. To your own point, I don't think that we or any other singular company will be the only ones to do that. I think that people will have different kind of roles in doing that. I mean, never say never, but I think the reality is just that there are people that probably will be better suited to understand the intricacies of and the actual problems of those customers. Because to your own point, and I'm a designer by background, by the way, so I always like fall back to my design thinking. So then to your own point, it starts with really appreciating the situation that any particular customer is in. So, when I went out and talked to the first 100 people around public, what I heard was like, I do have, $5,000, but I don't feel that's enough to start a portfolio. And I'm a little bit intimidated because I've seen all these movies. It seems like a bro-y culture, and I'm a woman and I don't want to answer. Like I picked up a lot of the stuff that's like, not necessarily, let's call it Western world specific kind of trends. But to your own point, I think you go elsewhere in the world, you'll see other problems that are much more present. And so you'll probably have other entrepreneurs and product builders that need to really be able to appreciate those and empathize with those in a very different way. And those can hopefully kind of build those products. And I believe they can, because I believe the infrastructure is there to do it. But it requires a little bit of a different design thinking kind of mindset, probably. It's great.
Jannick, our time is over. It was a super entertaining conversation. Thank you very much. I don't think it's going to be the last time that we're going to be invited either to one of our events or to Breaking Banks. Thank you very much for your time.
I hope not. Thank you so much. I enjoyed it.
Guys, this is a wrap. Episode 189. Thank you.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.